Hello everyone and welcome to Day Trader S&P 500. It's Saturday morning, May the 4th, 2024. This is Dale Woodson, editor of Woodson Wave Report, and our YouTube channel, Day Trader S&P 500. As always, we want to get our YouTube subscribers caught up with the information that our newsletter subscribers already have. We are going to start with our most recent report, which was put out not that one, my apologies, which was published pre-market open yesterday, Friday. We'll update that. This goes out to our monthly subscribers. Here was our wave count. Excuse me. We're looking at a hourly chart of the E-mini futures. There's a lot of information here. We've got 3 downside triggers that were activated. Okay, we've got 3 Fibonacci 786 second wave retracements at different degrees of trend. We have 5 direct hits on our targets, 3 to the downside, 2 to the upside. We've got a wave 3 low down here from this all-time high. There's 1 in parentheses at 52.35, 2 in parentheses at 53.08, 3 in parentheses down here at 49.6350. By the way, you see that 3.618. I've been charting for over 25, maybe 27 years, and doing Woodson Wave Report all that time. And I always use the 1.618, 2.618, 3.618 multiples. But a couple of years or so ago, I noticed that the multiples were hitting between the 1 and the 1.618, so I incorporated the 1.272 and the 1.414. But since this all-time high back here, they're not hitting those targets anymore. They're hitting the 1.618, 2.618, and 3.618, as you see here. So we've abandoned or let go of those 1.272s and 1.414s because the market's extending further to the downside to those multiples 1, 2, and 3, and possibly 4.618. So no use for those 1.272s or 1.414s anymore. Okay, so like I said, we push those aside. Okay, main thing is what's going on now from this wave 3 low. We have a developing triangle. We've got an A up, a B down, a C up, a D down, and an E up. If we extend that trend line through A and C, the upper trend line, excuse me, of the triangle, we had that 5187.75 target as of near the close. This was at the open on Friday. Excuse me. We'll have to keep extending that out, see where that goes. The Fibonacci 618 is right there at 5176, and this was 5157 as of pre-market open. Okay, and then wave 5 down, once 4 is complete, will take us below the wave 3 low. Okay, let's scoot over to the ES. There it is right there. Okay, and this is more up to date. Let me do a full screen on that. There we go. Okay, again, there's those triggers. There's the direct hits. We'll go into triggers and targets later. But here is that wave E, more up to date. That's through Friday's close. You can see the targets are still the same there. I don't have them all written out nice and big, but it was in the publication. There's 5 down below 3. For the change of trend, we can go back to the newsletter and discuss that. Okay, for confirmation of the change in trend. Let's get back to the pre-market open. We go through. This is all the verbiage there. There's the targets, okay, by the end of the trading day. That was Friday. That was extending wave E out right here. That'll go higher as time goes by. We'll see if it hits that Fibonacci and stops there, okay. Looking for the top of 4 to be followed by a wave 5 down below the wave 3 low, okay. Let me get through this verbiage here. Oh yeah, I wanted to let you guys know we're not a trading service, but some of our subscribers are using our triggers and targets here to for their entry points and their exit points and their stops, as you can see there. Okay, We're not a trading service. Any trades you make, you do at your own risk. But so far so good. That's what they're using, the triggers and targets. You can see we had, I think it was 5 or 6 upside triggers, and now that the market appears to have rolled over or topped, we're getting downside triggers, and this is the profit from those triggers to the 49.63 low. Okay, each one of them $50 a contract. If you added one contract to each trigger to that low, you would have that profit there. Okay, and then our upside, I didn't even count them. We have 1, 2, 3, 4, 5 upside targets. Okay, and the same thing, upside triggers, I'm sorry. Okay, so if you added a contract at each one, you get 8,700 there, 1,300 there, I'm sorry, 13,000, 24,000 there. And then from the first one, which was 3 days after the low, we got a trigger. The low was on 10/27/23, and that one to that high, the all-time high, produced 57,000. So if you added a contract at each trigger, 1, 2, 3, 4, 5, cumulatively, you'd have 108,000 profit. Okay, and you can see our testimonials link there, where subscribers are doing pretty well. Okay, so for a change in trend, we need to see 5 waves down, which we got at the wave 1 low. We need to see 3 waves up, which is wave 2, which happened. We need to see 5 waves down to a lower low, which is the wave 3 low right there. There's 1, 2, and 3. So those steps have been completed, but there's 2 more. Okay, after wave 3 down, wave 4 up should remain below the wave 1 low. Okay, so we'll just show you on the chart here. There we go. Here we're in wave 4 up. You can see the Fibonacci targets there. There's the wave 1 low. Goes above there. It's either a leading diagonal triangle or it's wrong. Okay, that's the beauty of Elliott Wave. We know exactly to the 100th of a point or to the penny where we're wrong every time. And again, repeating, anytime we make a trade, anytime we make a chart, a Fibonacci Elliott Wave analysis, the first question we ask, where am I wrong? Where is the chart wrong? Where is my trade wrong? For me, that's where I put my stop. And you like these 786 retraces because where you're wrong is really close to where you enter. Anyway, that's what we got there. Okay, so we need this wave 4 up to hold below this wave 1 low, and then we need to see 5 down below the wave 3 low, which is in our, let me scroll down there. All right, and there's those final 2 steps of the second degree, I guess we'll call it. You know, we need to see 4 up, remain below the wave 1 low, and then after 4 up, we need 5 down to below the wave 3 low at a minimum. That's the minimum requirement for wave 5. Okay, and here's our Fibonacci time spiral chart. We haven't, we'll look at that a little bit later, but the next turn date is May the 20th. The 3/26 turn date captured that high within 2 days. Okay, or there was a low right there 2 days before, but the major turn was on 3/28. This is for the S&P cash. Okay, the next turn date is 5/20, and coincidentally or not, there are no coincidences, right? From the March 28th all-time high, 55 days later is May 22nd. So we'll see how that works out. Here's our other turn dates based on the work we've done over the last 3 years. Okay, we've got turn date spirals on these start dates, and there are the dates there off of these start dates over here. There's the turn date, if you will. Okay, I think that's about it on that. Okay, so let's move from there to our May monthly report that we put out. Okay, and this is it right here. Okay, you can see we still got that ABC count. It's in play, has not been negated. Okay, there's the same disclaimer, triggers and targets. We've seen that already. Testimonials, we've seen that already. Okay, here we're looking at the S&P cash weekly bar chart, if I can get that in there. Okay, we've got 3 different counts here. A little bit complicated, but it's not that bad. Here we got a black count, which labels primary wave 3 at the 2018 high, that expanded triangle for wave 4, and then we have wave 5 up here, okay? That was at the January 2022 high, following black. We've got an A down and a B up. That's a little bit cut off there. But if that counts in play, and it is, then C down should go near or below the 34.91 wave A low, okay? You can see the B targets the 1.272 and the 1.414, and it is sitting right between them. The actual high is in purple here of 52.64. This is the cash S&P on March 28th, okay? So it's right in between the likely B. This is an expanded flat. You get an A down and a B up, and the B up goes above the start of A, which it has, and then the C down will go below the A low. So I said that on or below. It should go below, okay? But that is sitting comfortably right between those Fibonacci targets, okay? That's the black wave count. The blue count is very similar. We've got the 3 and the 4 here, okay? But then we've got, follow along in blue, intermediate. That's what the parentheses, 1 up, 2 down, 3 up, 4 down. Then we would get a 5, okay? A 5 to a higher high, and the target was 51.89, and it surpassed it. So we'll see if that's in play, but that'll all depend on this 4 here, okay? So we've got a 1 in parentheses up, 2 in parentheses down, 3 in parentheses up, 4 down, and then we've got what's developing as a following blue, 1, 2, 3, 4, 5, okay? So it may have petered out there. We'll see if it makes a higher high, but that's the blue count. And lastly, the purple count, okay, we'll just start from this wave 4 low. It's showing that as wave 1, the 46.07, wave 2 here, wave 3 here equals wave 1 in purple. This is from the October 2022 low. Then we would get a 4 down and a 5 up. So how do we know which one's in play? Well, that's simple. If the purple one is in play, the market will pull back in a 4, and it'll hold above the wave 1 high of 46.07, and then yield to wave 5 up to above the previous all-time high. Okay, so the purple is the most bullish count, and it's in play, and it's out of play as soon as this decline from the all-time high moves below 46.07. Again, we know to the exact point or 100th of a point where we're wrong. That's where 4 is wrong. So the purple is the most bullish count. It calls for that as being a wave 3. This is a wave 4, and then a wave 5 up to higher highs. When we can calculate that exact target once we know 4 is done. So if we get a 4 pullback above 46.07 and then a move above the all-time high, which is 3 here in the purple, which is 52.64, then we know exactly where 5 should be. But the minimum requirement for 5 is to be higher than 3. But we'll have Fibonacci targets. Most of the time it's equal to 1. 5 is equal to 1. But in this one, 3 equaled 1. So 5 could extend to a 1.618. Again, we're going with the 1.618s, 2.618s, and 3.618s now, ever since that all-time high, because the ones between 1 and 1.618, the 1.272 and the 1.414 aren't happening. Okay, so that's the weekly bar. I think I have that here. There, that's the same chart there, and that C should go below, and that's all that there. It's a little bit crumped up there. That's a little bit better. Okay, there's the 3 wave counts with all that information there. This is what we're watching real closely here to see if this purple wave count is in play, and that should hang above 46.07. Okay, let's escape out of there. Let's go back into the May monthly. That's the S&P cash on a weekly bar. Okay, there's a black wave count. You can see right there the all-time high is sitting between the 1.272 and the 1.414. That's the normal retracements or extensions for an expanded flat. Okay, that's specific for the expanded flat. Okay, and it runs right between. There's the blue, it's the same, it's bullish, and I'm sorry, bearish from the all-time high, and the purple is the most bullish wave count. Okay, and here we have a daily bar. You can see here, these gaps are starting to be closed as the market moves down. All right, we had that leading diagonal triangle here. It doesn't go all the way back to the previous all-time high. That's an A down, and that's B up, and you can see we've got the same blue and purple. We don't have the purple on there, but we'll see how these go. There's a lot of open gaps here, but some of them have been closed, and there's a lot remaining to be closed. Okay, so that's the most bullish wave count there. I think I may have that also on the chart. Let's see here. Let's go to daily. Yeah, there it is. Make it full screen. There we go. You can see where those are right there. A couple direct hits. We don't keep track of the direct hits on the S&P cash as we do on the E-mini futures, because we do a much shorter time frame on the excuse me, E-mini futures. Okay, there we are with that. Let's get out of that. Let's go back to our monthly, and oh, there's our hourly. Here's where we want to throw in the Fibonacci time spirals. The market is spinning off of this 1228 high. Is it the all-time high? No. But the market is making its turns, as you can see, on the Fibonacci spiral dates after that high. Much like very long time subscribers, and we have 20 and 25-year long subscribers to our newsletter, will know that back in 1999, we called an all-time high. I think it was August 24th. The market didn't make a high until January of next year, but that turn date on 8/24/99 marked turn dates in Fibonacci sequences for 7 years through 2006. It called nearly every high. I might have missed one or two. I don't have it here with me. I've shown it before, but this is playing out similarly. Sorry. Okay, is 1228 the all-time high? No. So far, this is okay. But this is turning on these turn dates, and the next turn date is May 20th. You know, and this has lasted, what, 6 months? We'll see if it'll do another 6 or 7 years, but it's early, right? We'll see how this goes. But there's the turn dates in the sequence, and I think, do I have them up here? I have them right here. Okay, there it is, bigger. You can see the turn dates, and this one's looking pretty good. I mean, the slippage is virtually nothing. We missed by 4 hours on futures there, a day there, and 2 days there, the 326, and the all-time high in the cash was 328. Okay, next turn date's May 20. Okay, we'll see how that goes. But let's see. We gave you guys. Oh, I want to show you guys the hourly on the chart too. I think I have that. Yeah, there it is there. And we're looking at this. Yeah, that's why I wanted to show you on the cash. We've got a 1 down, a 2 up, a 3 down, and there again, there's a 3.618 multiple. Okay, and we've got a 4 up. It's sitting right on the 618 retrace as of yesterday's close. Again, it should not go above the wave 1 high. So there's a nice trigger and target on the cash. If you entered at the wave 4 high, your wave 5 down is going to go below 49.53 at a minimum, and that's 200 points. Okay. And where is it wrong? The wave 1 low, which is, let me see if I can jump on it there. I think I'm on it. 51.86. So it's a risk of basically 60 points to the risk with 200 points to the reward, round numbers. That's between 3 and 4 to 1. That's not a bad ratio, okay? So that's what we're looking at, and this 520 date, if this continues, could mark that next low, which would be wave 5. 4s are long and sideways, so don't know if it's done yet or not. This could bounce between this 618 and this low here and go up and down, up and down. 4s are long and sideways by nature, so that could be it, or it could go longer. We'll see. We're watching it. But we know our upside and downside parameters. The upside is the wave 1 low. It should not go above it. The downside is the wave 3 low. It should not go below it. When it does, it's over. and 5 down is in play. Okay, that's it on the S&P hourly. Let's go back to our May monthly report if we can. Okay, there's the hourly and there's the turn dates. Okay, get into all that verbiage there. Here's the NASDAQ composite. Okay, we've got a couple different wave counts here. It's a daily bar. The one thing that's interesting from this all-time high, which was in November, and the Dow and the S&P topped in January of 22, the Dow and the S&P had overlap with wave 4 to 1 and a leading diagonal triangle. But in the NASDAQ, there's no overlap. It's 1, 2, 3, 4, 5, as you can see, for wave A down. Okay, so that makes this B wave possibility much more stronger case. You know, again, it's an inverted flat. You get A down, B up to above the start of A, which is right here, 16,212, and then C below the wave A low. So if this ABC is right, we're just starting a big decline of a lot of points, okay? But we've got the alternate count in here, a bullish count, which calls this correction complete. It's alternate because this shouldn't be complete on 5 waves from an all-time high. Okay, so there's a high level of confidence on the primary wave count, which is the ABC up for the larger wave B. Okay, but the alternate count is 1 up, 2 down, 3 up, 4 down, holds above the wave 1 high, and then we got 5 up. Okay, 5 equals 1 at 16,905. We got to see it 16,905, and there's that B wave 17,877. Again, that's the 172 for the expanded flat or inverted flat, which is typically a 1.272 or a 1.414. We're not going to use those for extensions, just for inverted flats. But you can see, as of the all-time high, which in the NASDAQ is March 21, didn't reach any of those targets. Okay, so we'll see. Maybe that's a sign of the weakness in the move up and the strength of the move down. But that is the NASDAQ daily. That's pretty clear. We'll leave it there. Okay, there's our triggers and targets. You can see it didn't reach them. Okay, so there's the verbiage there. There's the hourly, which as of this publication, I think the black wave count, this was pre-market and the black wave count was eliminated, so the blue wave count is in play. Okay, we'll go to the Dow. Here is the Dow daily bar. See if I can get that. There we go. Okay, and we have that A wave down. Again, there's that overlap. 1, 2, 3, 4, 5. 4 overlaps 1, so it's a leading diagonal. The leading diagonal is the A wave down, the 5th wave down. Okay, we got two different counts here. Again, the black count A, B, C up for the larger wave B. So those targets there for B are 39,127 and 39,987, and the market sits right in between them at the all-time high. So that gives credence or more probability of this black wave count being correct. Okay. Otherwise, we have alternate count in blue. Again, we got a correction complete. Not, well, it could be. That's a leading diagonal. I mean, we got 1 up, 2 down. There's a 3 up. That's the alternate count. Okay. We drew a trend line connecting the lows of wave A and the other low, and made a parallel trend line. The market peaked above it, and now that trend line should be resistance for any moves higher. Let me see if I have that in the charts here. Let's go to the Dow. Let's go here, and there we go. Okay, oh, we don't have that in. That's a little better. There we go. We started this. Let me get a little closer on the Dow. Let's go with hourly to get that what it's looking like from the high. Okay, here we go. Here, bear with me while I do all this. There we go. Okay, that's not quite what we want, but it's close. I think we can see everything here. Okay, from that all-time high on an hour, we've got a 1 down and 2 up. Again, here's 3 sitting at the 3.618. There's 4, which is a beautiful 0.382, and now it's even higher. Okay, this was done Friday pre-market. Let's just see where this is. This won't be to the penny. I like to be accurate to the penny, but I'm doing this live, so there we go. Let's move that 2 up out of the way. Let's get that as close as we can to that top. There we go. Okay, so 4 sitting right at the 500, which is similar to the E-minis. So let's fix that while we're here. Okay, that's a 500 retrace, almost perfect. Okay, where is 4 wrong? When it goes above the wave 1 low of 39,277. Where is it convinced that it's right? It's when it goes below the wave 3 low, and when it does, we'll get a wave 5 down to below the wave 3 low. Okay, again, 4 is long and sideways. That's pretty long and sideways, but it could go further. Okay, that is the Dow. Let's get back. This is a massive update, isn't it, by the way? Okay, there's all the Dow. There's the targets sitting right between that inverted flat or expanded flat targets right there. Okay, then let's move on. There's the hourly, which we're just, and that's pre-market, so now we know that 4 is now a 0.500. Okay, this was put out pre-market. Here's our bond market. We love the bond market because we've been all over it. Been bond market timer of the year when Timer Digest existed, and we've been long for years. I mean, the wave 1 high here is from the March 2020 low, the year 2020, and we've been long this whole time. And there's no sense in trying to go short for a very short term. And we've got a 1 up, a 2 down. 3 equals 1 in the Roman numerals here at 7.255%, okay? 1 up in Roman numeral, 2 down at the 3.253. That's where 3 equals 1, and that's a minimum target. 3 could be, as you know, a 1.618, a 2.618, a 3.618, which will be much higher than 7%. Again, this is a long-term forecast. This is the largest degree of trend, and this one here took from March of 20 to October of 22. That's 2 years and 7 months. Okay, so get down to the next lower degree of trend. Okay, we've got a 1 up here in a circle. Okay, and that was our target. Our trigger back here was wave 3 high, and it gave us the wave 5 high, which is the larger degree wave 1. And that was a near direct hit to within less than 2 100s, whatever it is. Anyway, then we've got from the 1 up in a circle, we've got a 2 down in a circle. Okay, so and that's where 3 equals 1 right there. That's the 5.551%. Again, that's a minimum target. But again, we're looking at 3 degrees of trend. We've got the 1 in Roman numerals, 2 in Roman numerals, 3 in Roman numerals, target 7.2. Then the next lower degree of trend, we have a 1 with a circle, which is primary, 2 which is circle, and 3 target with a circle, and that's a minimum 5.551. At the next lower degree of trend, from this 2, we have a 1 up, a 2 down, and there were our 3 targets, and it went to all of them. Let me see, that's not updated. Let me get those 3 targets. You can see 4.484 is the 1618. But let me get over to the US 10-year here. Bear with me while I find that. There it is, US 10-year. Go there, and we're on hourly. Let's go daily. Get the bigger picture first and then drill down. Okay, here we go. This is much better. We can get this into view, make that a full screen. See if we can get this to line up. Okay, and you can see our oh, here it is. It's off just a little bit. There's a 2.618. Let's see if I make that bigger. It'll probably get it all into play. Move that over. Okay, there was our upside trigger, the A wave low. Okay, and that told us our count was right. There's a 1 up, a 2 down. This is the 3rd degree, or the smallest degree of trend on this chart. We've got a 1 up, a 2 down. These 3 targets here there was the 1.618. Again, it's not hitting the 1.272s or the 1.414s unless it's an expanded flat, okay? Wave 2 usually. And here you can see the high is the 4.739 on April 25th. The 2.618 target is 4.897%. Okay, we're getting a little correction here, so we got a 1 up, a 2 down. Could 3 be here? Yeah, it could sit between the 1.618 and the 2.618. We'll have to watch this decline. Where is this count wrong? At the smallest degree of trend, which is the 3 in parentheses, which is my minuet degree, if you will. If it goes below this wave 1 high, which is 4.196%. Okay, I'm going to throw that in there. 4.1. Let me clone that, put it over here, and let me just make triple sure. 196. There we go. Okay, so that's the make or break here for this decline. Okay, that's where it would be wrong. Otherwise, it's 3 up, be followed by 4 down, and 5 up. Don't give up on 3 hitting a 2.618. Okay, or it could be here, then we get a 4 down, and then we get a 5 up. Okay, but again, 3's minimum requirement is to go above the wave 1 high. It did. Okay, and it could have topped right there on April 25th. We will see. But that is the US 10-year. Okay, let's get out of that. Let's go back to the May monthly. There's all that information there. Lots of triggers and targets that were just hit. Okay, and achieved. Targets activated. I'm sorry, trigger activated. Targets achieved. That's the current one there. Again, it went above the 1618 and it's below the 2618. Okay, it was activated on 424. There's a future one at the next 2 degrees of trend. You can see there the 7.255 at the largest degree and the 5.551 at the next smallest degree. Okay, there's all of our past ones, and it's yeah, we're all over the bond market. We love the bond market. No one was paying any attention to it until rates started going up in a third wave, but we were a couple years ahead of everybody after the March 2020 low, which was near 0. Okay, anyway, there's that. Let's go to the gold market. Gold is up, 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 keeps going up, and see if I can get that in focus there. Okay, lots of triggers and targets. I've been looking at the daily bar going all the way back to 2015. We've got a 1 up, a 2 down, 3 up equal to 2.618. Sound familiar? We've got an A, B, C for 4 in parentheses down, and we're in 5 up, okay? And there is 1 of 5 on May 5th. There is 2 of 5 with another direct hit, another direct hit. There's a direct hit up here with the 20 within 0.21 of $1. Okay, way less than a point. You can see our targets up here, okay? The 3 of 5 is what we're in. We've got 1 of 5 up here. We got 2 of 5 down here. There's our 3 or 5 targets. You can see them there. And it reached a 1-to-1, which could be the high. We don't know. This is a couple days old, so we can look at that. But we have higher targets. You can see the actuals between the 1. This is old because it's it might hit the 1618. That's where we had the 272 and the 414. But with our E-minis and our S&Ps and our Dows and our NASDAQs, we're looking at the 1618, 2618, 3618. In fact, let's go to gold. Let's find gold here. There it is. We found it. We're going to go here. We're going to go, let's keep the daily. All right, let's see. Oh yeah, I got them there. Okay, I'm going to give you guys the bigger targets here. Let me get that out of the way. Let's get the settings here. We'll update this. We'll take out the 1272 and the 1414 and replace it with the, here we got the 3. We've got them already, okay. I guess they didn't show up on the chart, but here's our, let's move this out of the way. Let's move this down, move that out of the way. There we go, okay. We've got 1 of 5, it might be a little hard to see. There we go. We got 205. There's the three targets. Okay, there's the 1.000 at 2278. It's been achieved. The 1.618 is 2567 and 59 cents. The 2.618 is 3035.50. And the 3.618 Fibonacci multiple is 3503.41. Okay, let me pull these in here. And yeah, we'll take that there. We're going to add these in there. Settings. What is the 3.350341? That's the 3.618. And then we've got 3035.50. 3035.50 is the 2.618. We'll leave those old 1414 and 1272 in there for now, because they haven't been achieved. But there's our targets right there. Okay, there's the 4618 up there, 3971. We get things like crashes like 2007 to 2009, the year 2000 to 2002, all those things at 1987, 1997, 98. You might see a 4.618 in those scenarios. Okay, so okay, that's it on the gold. Let me see what else we have here. Let's get this back to, there it is, the main monthly. I think that's it. Gold, yeah. Oh, there's our triggers and targets. You can see right there. Okay, they're in reverse order from lowest to highest. Okay, and there's our past triggers. That one failed. By the way, the last one, if the trend changes, the last one should fail. Okay, so that's perfect. All right, then we had an up target, hit it, down target before that, hit it. That was that wave 4 low. Okay, remain long. We've been long gold for a long time. Okay, so let's go up here. Let's take that down. Let's get you guys all the way around to where we are. Okay, this is what we're looking at going into Monday or Sunday night in the E-mini futures. By the way, our alternate here is 1 down and 2 up. Okay, don't know if I mentioned that before, but this is perfect. This 4 is, you know, first pattern I learned was a triangle by mistake. I don't know if I want to repeat that story or not, but hard to sneak a 4th wave by me after 27 years of the first pattern learning is a 4th wave triangle. Okay, that's it for this report. You guys have a great weekend, and until next time, take care, everyone.